Welcome back to another episode of the Elevated Chat Room. Elevate your mind, elevate your life. It's your host, Lonzo Jones. I am back once again, but tonight I'm not the star of the show. Tonight we have a special guest, Mr. Stephen Tanner. I've been knowing this young man for quite some time, probably about 12 years now, and he's a solid guy. But tonight we're talking about from the topic of the truth about insurance they never told you. So, Mr. T, well, I don't know how I'm getting your name like that when I've been knowing you all this time. Mr. Stephen Tanner, he is the owner of Stephen Tanner Agency, Country Financial. So, Mr. Tanner, tell them a little bit more about yourself, man.
First and foremost, man, Alonzo, thanks for inviting me out and spending time to talk about insurance, man, because it's a very crucial subject that no one really wants to talk about and give you some real answers, man. Okay. So, I'm really glad to be here.
So, first of all, before we get into it, what got you into doing insurance?
I was retired from Popeyes and I was looking for something else to do. And just a favor of God took me over to Athens, Alabama. There's a pre-existing book of a large sum of money. And the gentleman, I sit down and talk to him, he says, I'm going to put you in business. I said, going to put me in? He said, yeah, I'm going to give you a large book. And I just want you to talk to people about insurance because they just don't know.
So what don't we know?
It's a lot of misconceptions about it, thinking that as a young person, you really feel that I don't really need this. True. I'm going to work hard. I'm going to wait till I retire and get older in life, and then I'll spend that money. But the misconception really is this. When you're younger, it's the best time to get the policy. From age 0 to 30, most of us don't have any diseases. And that's how the insurance company really makes money. Yeah. On charging you for a disease that you acquired during those first 30 years of life. Most of my counterparts come in and they start from age 0. Let's get the money and get the policy because the cost of insurance, as you get older, it costs more to insure you. And if you have diseases, it's going to cost you even more. So the misnomer is that I'm going to wait till later, and that's not it. I got to get it as early as possible, especially for my children. Because if I plan on sending money or having legacy money come into their lives, I got to start at 0. They have things like 10 pay, 20 pay, and in 20 years, it's completely paid off. And it doesn't cost you a lot because there's no diseases in the policy.
So what you're saying is more advantageous for anybody to purchase insurance sooner rather than later and before you're, diagnosed with any type of illness.
Critical. Because we can build in your policies. Let's say if there was a disease and it comes about later, but I've already got you insured and guaranteed to pay it out for you. So once the disease is notated in your body and they find it through asking the doctor's information and things like that, then they have to go back to the underwriters. That's where it gets a situation where that's what insurance companies do. They're betting that you're not going to live to that payout. And disease tells them, based on this disease, based on this how many years, and if you're taking care of yourself, which most people don't, because we eat a lot of things that are not good for us. So they're thinking about, they may make it, maybe it's a 10 or 20 year policy, they may make it only half of this. And then I don't have to make that payout. See, the key is they're in business to make money, and that's what they do. Yeah. But we have to be advantageous for ourselves, is get in younger and have the payout established. But it also, it's a mind thing too. We have to be willing to take ownership of our bodies. If we don't take ownership of our bodies, we don't take care of ourselves. We work 30 years for a particular company, retire, and then they give us a gold watch. Yeah. But most of us don't make it to that. In our communities. That's true. We don't make it to the time of getting retirement, so looking to then and waiting late is a misnomer. You got to invest in yourselves. And once you do that, then you invest in your children.
I like that. So my thing is this. Growing up, people really didn't talk about insurance, so I guess one of my misconceptions, well, I don't even know if you would consider a misconception. I was just uneducated about it, and then people started passing away, and then you get a job and then they get you insurance, but you don't really own that policy because the company still owns it. They never send it to you.
Correct.
But then it's like, oh, when I started my job, my career, it was like, oh, I got life insurance now. And I think that's what kind of triggered me to start searching, like, okay, what's the difference between, so what is the difference between like a whole life and like a term policy?
Let's start with the term. Term is for a specific term of spectrum of years. 5 years, 10 years, 20 years, 30 years.
Okay.
I'm willing to give you a $100,000 policy for 30 years. Okay, at the end of that 30 years, there's nothing else available. A whole life policy is strictly whole life, your entire life. But you pay into that policy your whole life if you negotiate it that way. Some people negotiate it to 65, some to 70, some to 80. It's money that you have to steadily put in, but it builds cash value. A lot of people get term only for a certain period of time. Let's say if you buy a house and something happens to you, you want that house paid off. So a 30-year policy, $300,000, I'm on a betting that if something happens, I'm leaving my wife enough money to take care of the house.
It makes sense.
It is. And then the term policy, it's a good investment, but the best policy is a whole life or index universal life policy.
Okay. So what you're telling me is that if I get a term policy and I pay it up for 15 years, that money's just lost if I don't pass away.
It's gone. They have a little caveat in that. You can do a term policy with return of premium.
Okay.
They're going to charge you a little bit more money, but at the end of the policy, at the 30 years, you're going to get back most of what you paid in.
Okay.
But they're going to take your money and invest it. So my thing is, if you want a return of life policy, why don't we take that same money and invest it in yourself? So you're going to get that money back. See, but if you do a term policy, it's no cash back. It's strictly for protection. To cover you, cover your families. A lot of people do $1 million, $2 million worth of, that takes care of their schooling for their kids. Something happens to mom and dad along the way. I've got cash money. I've had the ability to go and take checks to people's now. And it's so fulfilling. It's kind of an unselfish deal that the mom and dad thought enough. If something happens to me, my family's going to be taken care of. And it's a stressful situation when someone dies in your family. But if someone's at the door saying, your husband made a plan for you, here's this check, $100,000, $200,000, $500,000, $1 million. That immediately takes the pressure off your death and saying, Dad left a plan for us. We're going to continue to function. We're going to continue to grow. I can go to school. We don't have to sell the house. That's something crucial, that it doesn't take a lot of money. It just takes planning and discipline.
So if somebody is healthy, let's say 25 to 30 range, they're healthy and they want to get a whole life policy or an index universal life policy. How would that look? And I know it's so many different ways you can write it up. But is there any way you can give like a simple example of like how that money would grow? You know, something like that.
What we're doing right now is I'm talking to a lot of grandfathers and grandmothers, and I'm saying, you have a granddaughter. Instead of, let's invest in her life now because the cost of the insurance is going to be cheaper. So what I usually do is I write the younger kids from age 0 to 10 at like $30 or $40 or $50 a month. So what that's going to do is it's going to go and index universal life, so it's tied to the stock market. So whenever the stock market makes money, that same money is invested back into your policy. There's one thing about it though, there's a cap. The insurance is capped at 8%. The insurance company makes from whatever above 8. But one thing I love about it, Alonzo, is that it has a floor. And if the market dies, you don't lose any money. So you're taking that $30, $40, $50, whatever you invest monthly into that young child's life, that's growing interest each and every month. And the one thing about it also is that there's some years that you're going to make more money, and there's some years that you're not going to make enough. But it adjusts. It adjusts so that you can put more money into the policy or just put the minimum. That gives you the ability to plan, have the budget. But the money's to be invested for legacy. It's got to be legacy, looking ahead. What do you want to achieve? I talked to my grandson. I say, 7. He said, what do you want out of life? He said, number 1, I want to own my business. And number 2, I want to build a bank. I said, you want to build a bank? He said, yeah, Big Dad, I want to build a bank. So I tell you what, he cuts grass. You start giving how much you want to put in each month. See, it makes him take ownership of the policy. He's no going to go on and buy tennis shoes. He's no longer going to buy games. He's looking at ahead. In 10 years, he'll have enough for a down payment to buy a house, open up a business, but he'll have cash flow. He's 15 years old now.
Yeah.
So in 12 years, he's going to have a stack of cash, and it's going to keep growing. He can borrow against it and put the money back in, but he has the equity to go and do something. He won't have to be like Granddad, who had to go to a bank and borrow $1 million. Just thank God for the favor of God. He opened that door to make it happen for us. But these policies are so crucial because of the cost of insurance.
So when he borrows from himself,
yes,
he borrows from his policy. Let's just say he wants to start that business. He needs about $15,000 to start his business.
Correct.
So he has that in his policy. Now, if he borrows that money, does he have to pay it back? Because he's borrowing from himself. Well, technically he's getting a loan from the company, but it's like he's borrowing from himself because he's built that cash up. Does he have to pay that back, or do they give him options?
It's advantageous that he would pay it back, but he doesn't have to, because that money, when you pull it out, is not gaining the interest that it would if the total pie was there. So what you do on that particular point is another great point. I'm glad you brought it up. During the first 10 years, you can borrow that money at 2%. Then after the 10th year, you can borrow that same money for 0.5%.
That's sweet.
So it's advantageous that I go do my project, and then I let what I do pay the money back.
That's good stuff.
That's
like you don't see, this is really, really good.
Yeah.
Really good, because like we don't get taught, like I said, growing up, I was uneducated about life insurance, and it was unheard of, an index, an IUL, like that right there. When I first heard about that, I was like, man, it's too good to be true.
Exactly.
Like even telling my homeboys and friends, like, look, y'all, it's like, man, this can't be that good.
It's a phrase that's on the internet now. It says, be your own banker.
Yes.
And that's exactly what you're doing. You're taking your money, invested in it, and you have a plan that you're looking for something in the future.
Yeah.
It's no bank that you can go to right now and borrow money at 2%.
No.
Then after 10 years, you can borrow for 0.5%. Why would I not be my own banker? I'm going to pay you 7, 8, 9%. I can go get money out of my policy for 2%. And I'm going to have several of these policies.
Yeah.
It's not just one. And then every project you want to do, it's available for you. You see a business that you want to invest in. You see another entity that you want to buy. It becomes multiple streams of income.
That's good stuff right there. So I'm loving this. Like a lot of people don't know this, but when I was in college, no, I'm talking about me. Yeah. When I was in college at UNA, I think it was my last year, I sold insurance for Liberty National for like about 5 months. I had to, I had to get it how I could. And I learned a lot, but it wasn't no index universal life. It was just regular term and regular whole life back. And this was probably about 12 years when I first got up here in 2007.
Yes.
So it was about 2007, 2008 time.
It was out there, but not in these. It was like universal life.
Yes.
It wasn't index. It wasn't index universal life. And the thing about it is, man, is once you start doing it and once you start seeing it accumulate, everybody's saying, well, the stock market is doing so bad. In the last 20 years, I did a 20-year average of the stock market. It's only 4 years that it was down and didn't make any money. And if you notice the stock market, it may take a hit, but it comes right back up.
Oh, yeah.
But you just have the discipline to know that this is long-term. This isn't a short-term play. Yeah. It's a long-term play because you're looking at your kids and death is inevitable. It's going to happen. So you make a plan for that. You make a plan for them. I'm going to put a policy for death, maybe $30,000. I'm doing a whole life policy. Death is taken care of. But what I'm looking at is my legacy. I've got to have a long-range plan.
Yeah. So why, I've had people ask me this. Why should I invest in the IUL versus just stock market in general?
Because you don't have the protection of the floor.
Okay.
When the stock market goes down and you don't have your assets in an IUL policy, you can go past what you put in there. It can just wipe everything out.
Yeah.
Unless you can get to your broker and make the trade or do whatever. But this, you don't have to worry about. The floor is so critical. You're tapped on the top part, but you're still able to make money up to 8. 8 to 10 to 12. That's all what the bankers and the insurance company's going to make the money. But that's okay. See, you're allowed to invest in the stock market with not having the loss of losing everything, because that takes a lot of people out.
Yeah.
When you go in there and you lose, well, I was anticipating this to pay my childhood education, our house, and then they're just shut down. You have to use wisdom and place it in the right particular IUL and write it up that is advantageous for you to be successful.
Yeah.
And when you do that, it pays.
Sweet. I got one of the ones that I have, I think it's on myself, is that my floor is 0.5%. So no matter what, I will always get 0.5%. I think mine is capped at 8.5 or maybe something like that.
Yeah.
But I know my bottom is 0.5%. So it's like no matter what the market is doing,
Correct.
I know that I'm actually going to gain on the years that is. Yeah. So it's pretty sweet. But like I said, you definitely have to sit down with someone like Mr. Tanner here and let him educate you on it. And then IUL may not be for everybody.
Correct.
If you just want a term, if you just want something, but you need something.
You got to get out and
You
have
need something. Because we can't be always doing the GoFundMes.
And the thing about that is kind of crazy is the person who does the GoFundMe makes money off the GoFundMe.
Wow.
So all that money doesn't come to you. Yeah, I said, I'm going to do a GoFundMe. You're going to take half. I need this to bury it.
Yeah.
I got to charge you for doing that. So why not? It's a discipline play, man. It's a discipline. I look at the insurance agents who used to come around and collect pennies and nickels and quarters from my grandmother because she would keep $1,000, $5,000, $10,000 policy. And then I think that got a bad thing because they sold us policies that was almost worthless. What can I go and do with $1,000, $3,000 policy? And then they would pencil whip us, not saying all, some, because we don't have all great insurance company. We don't have all great bankers. We have people who are dishonest. But what they would do is pencil whip us. So when it came time for us to get the policy, it was worthless. Or they would say, oh, you've came in and you've borrowed that money against the policy. There's nothing there. So I think that has got a bad taste in a lot of people's mouth. And we do have people out there who take advantage of people. They don't have to, but that's just that's the way they do business. They're unethical. So you just have to find someone that you trust to really lay down what you're going. I do also what is called a needs analysis. Let's look at you and your wife and let's write out what is your plan. Then based on that plan, then we come in there with the insurance to fortify that plan. Insurance is income replacement in a nutshell.
Yeah.
Something happened, I got this here. And it's just wisdom, man.
Yeah, I like that. So let's move on to this next question I have, man. It says, how can life insurance actually be used as a tool to build wealth, not just cover death? And I think we did hit on that.
Yes.
But let's just hit it like real specific and then jump to the next one.
I think what we're looking there in that we talked about the IUL and we talked about the term, but it's there to bring in the increase of your everyday living. You're working a job every day. And if you're disciplined enough to save some money and put it aside, some people just believe in blinks. They believe in just going and get the different investment through the banks, but that's a very limited and a small amount of money. So why not get the best return on your money? What I like to do often when I bring the people in the office and I do the needs analysis, let's say if you were going to do a CD, let's say if you did this, whatever, 3 different things. Let's take them and put them side by side, 10 years, 20 years.
Yeah.
And then once we do that, we can see exactly what your needs are. And you have to learn to be able to trust and what's your risk potential. So a lot of people are, I don't want to risk that much. Well, let's take it up to the point where you're ready to risk it. And then let's do that for 5 years and see the return you got. Now I have confidence. I see something in black and white. This is what my return was. This is what I can invest in. And this is what I can look for in the long run.
That's good. That's good. So I think most people do look at, even though it's called life insurance, but we really just think of it as death insurance.
Exactly.
And not knowing it, like it's literally telling you that you can actually use it for life. You can use it for your kid's life, or you can use it for your life once you put enough money into a policy to borrow from it.
Correct.
So it's actually it's truly life insurance. Like it's not death insurance. It's covering your death too.
That's it.
But it's really for life.
And that's what we really have to look at it, man. If we could really dispel, this is only if I die. No, it's a creative investment that you're taking your money and you're putting together a strategy. And you're looking at the strategy, seeing where you and your loved ones, where you and your wife and your family want to go. See, if we have a vision, then God gives us the ability to see the vision out. And then if we're trusting God and we're believing in God to take us to a position. See, because each of us have a potential that's in us that God has given us. So we take that potential along with the plan, and then he tells us to go use various things in the plan to be successful. So once you have that type of mindset to trust and believe that it is going to come out and be okay.
That's good. So what are some smart ways business owners can use insurance to protect and grow their companies? How can companies use it?
It's so many things out there, but I just want to talk about one. It's called a key person. Every business has a key person. That's the heart, the potential that grows a business. It's entrepreneurs like me and you both are. We will be considered key persons. So what the government gives us is can write insurance because it's a write-off. We can take the money, we can invest it in the company, but I have protection. When I opened up Popeyes, I had to have $1 million worth of coverage. I wish I would have knew IUL then.
Man, what?
For 20 years, I had $1 million tied up, man.
Wow.
All I had was term. I didn't know.
Wow.
But now I'm telling the investors, key person is tax write-off. And then the thing is, it protects your company. Let's say we got this key person that's set up there, and then if something happens to that key person, you put it in the policy where you can take the money from the policy and go get you another key person or use that money to invest in the company while the company's still going, while you're going to get this key person. So you have to invest in something that's going to give you a strategy that's going to return to the company and protect the company.
Wow.
Then we have people that you can do a buyout. Say if someone leaves the company, you get us insurance policy and we make enough. So if someone leaves, I take the policy and I buy that person out. So you don't have to go struggle and run to the bank to try to find out.
You use the policy.
Correct.
Wow.
It's so many things out there in the insurance. You just have to take the time because you have to do the research.
Yeah.
You got to do your due diligence. Once you do it and then you bring it back to your organization and say, hey, let's do key person. Let's do a buyout. So if anytime you want to leave this company, I'm not going to be hung up by you leaving because we have a policy set there to replace you, to buy you out, and continue growing the company.
That's good. I've never heard of that.
Critical. They're there in a different strategy. It's just that we have to, as a business entrepreneur, you get out there and you want to get open, you want to get running.
Yes.
But before that, you got to have everything in place so that if something happens, you got to be covered. Because, why does the company suffer? Because I didn't plan for you exiting. You told me you're going to be with me for 20 years. Me and this brother got together and we bought this company. We started running. But along the way, he didn't want to do it anymore. So to stress the company out and to stress cash flow out, for me to pull the money out and buy him out, then I got to catch back up to where I was at. Have a policy.
Wow. That's smart right there.
You got to, man.
That's some good stuff right there.
It's available. It's not hard to do. You just have to take the time, come with the vision, and let's map out a strategy, man, to be successful.
That's sweet. I know like certain churches, they will have key members of the church, whether it's deacon board trustees.
Pastor's a key person.
And they will have life insurance policies on them for however much the church can afford with, and when the pastor or the deacon or the member pass away, the church gets that money and is able to, not a church, you can literally pay the church off if it had a note on it. Correct. Now you also have funds to continue even improve your outreach.
That's correct.
So that's like when I started that's definitely because everybody's gonna check out. Like everybody's gonna check out. So especially when you get of older age and you got your kids taken care of, it's like, okay, well, even in your will, I know people that will be like, okay, well, I want X amount of dollars of this going to my church because my church truly serves the community,
And that should be a living will.
Yes.
We got to execute a living will and get our assets into something that's protected. So if someone does come in, you can't get those assets. Yeah. It's in a living will.
Living will. I like that.
Yes.
Man, this has been a very informative episode thus far. How long you been doing this?
I've been doing it now for 5 years, but I just think through business and doing business as an entrepreneur, things come across your path Nothing has ever just happened since anymore. If an individual comes across my path, he's had something for me.
Yeah.
I got to take my time to find out what that is, or I lose that knowledge, or I have to wait for God to bring that same person back across my path again. So when doing life, we got to be looking for those people who are coming across our path who have information. A lot of them won't share it, but you have to be able to break the ice and, oh yeah, you're nothing like they told me you. You all right? Yeah, I'm all right. Give me the information.
Yeah.
And then we become friends, and he gives me the information, and I'm like, wow, I needed this. Father, thank you for bringing this person across my path, because that enlightens me to some more knowledge.
Yeah.
If I can get knowledge, I can continue trusting in God, I know it will be better for me and my family and my community.
That's good. That's good. And you, like you say, God does not have to repeat. He does. He's not necessarily going to say, "Hey, you missed it," and I'm going to circumvent it happen again. Like, no, you're wise enough and you're close enough to me that you should have recognized that.
That's correct.
So that's just part of your discipline in that season. It's like, hey, well, God, next time it happens, I'm going to be ready.
It's like he told me one day I was at Popeye's zone. He said, "I'll tell you what I need you to do. I don't need you to drive no more. I need you to get in the back seat, put your seatbelt on." I said, "What do you mean get in the back seat?" He said, "I know where you're going. And I know how to get you there. Let's get rid of the pride. Let's get rid of all this other stuff. I just want you to let me drive and take me where I want you to go." And once I did that, the business took off. A guy eventually came and wanted to buy the business. But that was me humbling myself, getting out of pride, trusting God with a plan. That's how all this works. This is nothing Steve Tanner's doing. It's God in me to reach and touch people. Because we do this on a consistent basis, the other stuff will come.
Yes, sir. Yes, sir. It has to come.
It has to
if
come.
You're doing it, it's kind of like I tell my sons when it comes to training.
Yes.
If you practice perfectly, then everything else, back in the day, my granddad, he would always say, well, practice makes perfect.
That's correct.
Then he was like, no, grandson. He's like, I've been telling you wrong. It's perfect. Practice makes perfect.
It does.
Because you can practice, but if you got the wrong technique, or if you're listening to the wrong person, but you're practicing, but you're not practicing at a level of perfection. And once he told me that he would, and that's the same thing. Like, so if you do anything correctly, over time, it's going to reward you. It has to. It has to. So
it has a what to, man. And then I want to tell the people this, man. It's in the power. The money's in your hand to do what is necessary for you to do. You just have to equate it to what you're eating. This is the key thing I want to really touch on, is what you're eating, and most of it is dead product. So you can't put something dead in your body and expect your body to live.
Come on.
The red dyes, all the other stuff that we're eating. So the money is already in your hands. You're already paying it out. And you're eating these things that you shouldn't be eating. So if we cut back those things that are not life, giving you life, then you can take that money, and that's your money monthly for a policy. It's there in your hands. We just got to redirect it to the right source.
Yeah.
And that's through prayer. That's through discipline. That's through trusting. I can cut out sodas. I can cut out whoever smokes, cut out a pack of cigarettes. It's something that you're touching already in your life that if you would just refocus and make a commitment, I'm going to buy my grandson some insurance. I'm going to put insurance on my kids. I'm going to put more insurance on my wife. It's in your hand, but you just don't realize what's in your hand.
Yeah.
And you can redirect it and have the money to pay for it, and it won't be a stress. But when things get difficult, you can't say the first thing that's going to go is the insurance. That's what we're going to do.
Yeah.
Because it's going to shut it down. But see, that cuts your blessing off. Because there's always going to be the ups and the downs of life, but you plan and you eventually get a smooth transition, and it makes it easier for you. So what you're spending now just has to be looked at and thought of in another direction, and then invested.
Yeah, and that's the thing. They have to understand why they're doing it, and they have to understand that this is truly an investment.
It is.
You have become an investor.
That's correct.
And you're just doing it in a way that the average person may not know. So if you don't have a purpose though behind why you're doing, you're just doing because he convinced me. He was smooth talking, what I'm saying? He just convinced me. So like you said, when life hits, I can just get rid of this policy because I really don't understand the meaning behind it anyways.
And that's the thing that's very crucial. When you're doing this, don't walk away from the table without understanding. I'm not really here to sell you anything. I'm really here to benefit your life on the long term. Because if I do my job correctly, you're going to be better off. It's just no question about it. I look at the insurance agencies back in the 50s and 60s, and I look what the millionaires did. After they came out of the Depression, they put money into all of these famous people that you see have money right now.
They sure do.
They were putting $50,000, $100,000 on their babies at age 0. First day they're born and hit the earth and they have a name, put money in that policy. I looked at this one other couple that came and had a baby, and he was like, hey, I want to do $100 a month. I said, let's do it. So at 18, I'm going to give him 10 grand.
Mm-hmm.
He said, what? I said, yeah. The younger we do it, the most cost effective it is because there's no diseases. You're bypassing the disease stage. And it's so critical because if you watch TV at night, which we all do, what's mostly on the TV? Medicine.
Yeah.
Big pharma.
Man, what?
And I want you to take this because you're going to do better. No, you're going to mask the symptoms and create something else in your body that's going to fail. So my thing is this: eat better, find a regimen and a discipline to buy the policies that you can do. It may be $25 a month, $100,000 policy. Start. All I want you to do is to promise to start. And if you start something, you're disciplined, you finish. How you start is how you finish.
That's good stuff. We kind of hit on this earlier too.
Okay.
About underserved communities.
Yes.
Why do this community shy away from insurance?
Number one, we talked about is the understanding and the ignorance, and because our people are destroyed for lack of knowledge. But if you just really sit down and read, get a policy, look through it. I do cancer, I do all type of policies now. Now, if someone told me between 1 and 3 people, you're going to get cancer. So I'm thinking 1 and 3. 1, 2, if you had another third person in here, that person, one of us is going to get cancer. So knowing that information, and if I can spend $20, $25 a month to protect my family, because cancer is one of the things that destroy a family so quickly because of the cash. Because you need the cash to save this person's life. Just a week ago, I looked at what's it called on Facebook, open market, where you go and sell something.
Yeah.
Her husband got cancer, and they found out. So everything in the house was sold. They're away right now getting treatment, and they say, when I get back, we're selling everything in the house because I choose for my husband to live.
Jeez.
See, it's critical things that we got to make decisions on and prepare ourselves. Because if we prepare ourselves, not in the fact I'm preparing to die, I'm preparing to live. Because if someone is a bread earner is taken away, that salary is now gone. And if the wife is not working, or the wife has a low salary, what is the family going to do? They got to sell, go live with mom and dad.
Yeah.
And that's a lot of transition when we can just do a needs analysis, find out what is needed, and put it in place. I'd rather have peace, knowing if something happens, I've used wisdom to protect the greatest asset that I have. It's my family.
That makes sense.
Hands down, from my grandchildren to my sons and daughters to everyday life. But the problem is, going back to your question, is we just were never taught.
Yeah.
All the students coming out of school right now have to have a literacy path. They got to know how to deal with banking and finances and all of that. But prior to that, we weren't taught that.
No, we wasn't.
So now it's a situation where our kids are coming out with more information than we have. So we got to make it a situation that we got to put something in tune for them, because if you ever just sit down and listen to your kids sometimes, they have some very creative ideas. So I just sit and listen. And then the next question I asked my grandson was, well, you're very creative, so what you want to do?
Right.
You already got an idea that's God-given. It's a potential that's there that you're speaking about. You spoke it. And I learned this is the most powerful thing in the final authority is the word we speak out of our mouth. It can either create something or it can destroy something. So let's create more, invest more, and see our children, our families prosper. That's what he said in the Garden of Eden. He said, be fruitful, multiply, subdue, and have dominion. Which one of those are you doing?
That's a challenge right there. Man, this is This has been real, like I said, it's been real good. You can tell you know your stuff. You can tell you
It's not me.
although you've been doing it 5 years. I mean, but still, you got to put the work in. Like I know, I understand God does.
Yes.
Like God is behind everything that I do.
Correct.
But you can choose to sit down and not do nothing.
You sure
You
can.
know, so
And a lot of us have, man.
Yeah.
And that's unfortunate because I want to give you a tool that you can use on a day-to-day basis. We'll start off investing in our children, investing in yourself. And if you happen to be a business owner, let's get those policies that take there's certain things in an organization. If you're doing something well, but if you're out of position doing something that you can't do well, then your company loses. But if you concentrate on what you do well and then go get other people to do what you're not able to do well.
that's good. That's good. So can you share a story where insurance like drastically changed someone's life?
Okay. I haven't had the aspect of going to deliver a huge check, but one of my partners in the business was able to get and take $1 million policy to a family. And at the event of, I don't think even the wife knew that he had set it up this way. But when he got there, everybody was just crying and what we gonna do, daddy's gone, and what we gonna, how to make it. And the insurance guy said he took her outside. He says, Jack, I know they didn't tell you this, but Jack had $1 million policy for you and this family.
Wow.
And then he said it was just like this huge weight lifted up off her. She was, she was groaning and she was going through the actual death of her husband. But then she said to herself, thank you. I thank you for loving me more than enough that you knew that this might happen, but in the event that it did, you had a plan. And she went from stressing out and crying and bawling to thinking. She was just thinking, she was saying, we can make it now. We can literally make it now because this money is here. Now, an insurance guy that's with her, he's got to take that and invest it in an IUL. Another thing, pay all the debt off, then take part of it, invest it for the kids' college, invest it in other streams of income coming in, because that policy was a seed. It was a seed to give the life to the family. Now, she didn't go out and start buying cars or buying clothes and all the rest of it. He had a plan, and it was in his living will. And that's one thing I really encourage you is to have the living will, have a plan wrote out. Because unfortunately, I'll tell you another quick story.
Are you good?
My grandfather had a salt mine, and he had 7 kids, and he dispensed it all to the kids. It was supposed to be. But they started fighting about it because the person they left in charge, they didn't think that he should have left her in charge, of course. So guess who ended up getting the money? The attorney. Because each of them wouldn't hire a separate attorney.
What?
Yeah. And the thing about it that really got me, and once I got into this business, I'm saying, God, how could that have been avoided? Because when you leave a definite plan and then it's executed and everybody does what they're supposed to do, and he says, make a video, sit them all down, and tell them this is what's going to happen and this is why it's going to happen. Now, if you choose not to participate in it, you say now, and then you're excluded. But who's going to exclude themselves of a will?
Right.
So what happened is he eliminated the friction, he eliminated the fighting, he eliminated the backbiting, and the money got through the kids and through the grandkids. The other situation, very, very, very small amount of money. The attorneys got the bulk of the money, and it shouldn't have been. Shouldn't have been at all.
Yeah, and that's one thing that you just never know, when it comes to money, life insurance policies, and death, how siblings are going to.
Greed.
There you go.
Greed.
And it's like.
I took care of Daddy. He lived with me. Why should my portion be small?
Nah, see, and that's the thing. Like me and my brother, thank God we're close.
That's awesome, man.
But this is the thing. Like, if he did feel like, well, you've been living away, you know what I'm saying, all these years, I'm the one that's been having to help take care of mom and dad.
Correct.
I was like, oh, you can get more. Because
You're supposed to.
I'm like, I get it. I understand it.
100%.
But it's like you have to have that relationship with each other. And you can't, like I said, you can't be built on greed. Now, don't get me wrong. Would I like to have split it down? Yes, I would like to.
Yeah.
But it's like, bro, come on. Like, really?
It's fair.
It's only fair. You've been
because-
driving up and down the road, taking him to doctor's appointments and stuff
That's correct.
like that, you know. So I get it. I get it both
7
ways.
years, my father lived with me before he passed. And I got to know him in such a way that I never knew him because he was always a provider. Even to the fact when I was playing football in high school, he never could come to the games. And I always thought that he didn't want to come. You know, Dad, you never come. He said, son, he said, did you ever need anything? I said, no, Dad, you always take care of it. He said, guess where I was at while your games were going on. He said, I was working, taking care of you, that you never need anything. And it changed my whole perspective because he had me, my mind was believing this one way about my dad not caring. But this man at work, he worked 60, 70, 80 hours a week to take care of his family, man. And I was so selfish enough to believe that he didn't care.
Yeah.
And it just changed the whole relationship around, man, because of the fact that we often believe the non-truth quicker than the truth.
That's true. That's true. And we'll believe something about somebody without even asking.
That's true, man.
You know, we just go off our own feelings and assumptions. It's like, well, I thought this. Well, you never sat down and really asked me, you know. And I'm glad you guys was able to have that bonding time. Because as men, you grow apart. You still have the love, but you grow apart as you get older. You know, especially if your dad is not in the same city. We're not visiting him weekly, you know, and seeing him you just naturally grow apart.
You do.
But then when it comes time to where you're back in the same city or he's living with you, it's like, hey, you know, naturally, you get to learn, like you said, you get to learn more about him.
You do.
You get to sit down and just pick his brain about certain things. And, well, why this, that, and why that?
Yeah.
And you truly, truly get like you said, a deeper appreciation for your father. Or your mother, if that's the case.
Yeah.
Just like when they break things down, it's like, you know, I never looked at it like that. You know, why did you do this? And why did you why did you treat my brother different than you treated me? It's like, well, your brother needed a different type of love than what you need.
That's so us.
You see what I'm saying? Like,
yes.
So it's like, it sound like you gave him favoritism. You was easier on him. Well, no, I wasn't easier on him.
Right.
Your brother was easygoing than what you were.
Exactly.
You know, just different little things. You just like, man, I never even looked at it like that. I'm
Not at all. And that's it.
I've been tripping.
We get caught and we get locked into something that's not true. And it takes us on this tangent.
Yeah.
When he's saying, get back over here in the center, man, that ain't got nothing to do with really what's happening.
Yeah.
And assurance is that way. We just got to take our time to find out what's best for us. And when we do that, we'll pick out the right thing, and you got to pray.
Yeah.
And bring that back to the table with you. And this is a strategy. Does it change? Yes, it does. As the dynamic in the family changed, now I'm at the house and we're empty nesters. So then that's a portion of money that's not being put into a family. It needs to go someplace.
It does.
It needs to, because the golden years is coming right after empty nesting.
Yeah.
So what are we going to do when the golden years get here? We continue to spend at this level when we now need to be at this level.
True.
And then when it comes to 65 and older, is there going to be a Social Security there? Don't know.
It will be for y'all.
It's this other generations that are going to be.
Yeah.
Well, you
I work for Social Security, so it'll be there. How old are y'all? Well, let me put it like this. Let me put it like this. Let me put it like this. You got out. Let me put it like this. When you hit 62, you need to go get it. Don't wait till your full retirement age.
Okay.
When you hit 62 and you're eligible, go get it. The only reason why you shouldn't go get it is if you're making more than the allotment for that year. Okay. But if you're under that amount, go get it.
Got it.
So that's anybody.
That's the word.
That's anybody. Like, because you don't know if you're going to live to be 63, 64, 65, 66, the full retirement age. So you can go ahead and get that money, and guess what you can do? You can invest it yourself.
That's the key. There you go. Because you don't know what is going to turn out, and it's safer, I think, because eventually they're talking about privatizing it, right? Is that a real issue? Or
that's just talk now.
Okay.
Yeah.
But I say take the money, Put it in something for you and your family to have for those golden years. And if you got it, it just takes the stress out of doing life because money separates families.
Yes, sir. It sure does. It sure does.
Each and every day. It separates, it tears us apart. So have something that you can look forward to, that you can teach your children. Please teach your children about it. It's so critical because they need to know that it's invested for them. They've got money when they get old. What's your plans? I asked them, I say, well, this money that you're going to have at 27 years old, that's going to be 10 grand. He says, I can either buy a property, I can buy a building to put my business in. He said, but Big Dad, this is going into something to make more money for me. I'm in agreement.
That's good stuff. And that's the thing. It has to be taught to the generation.
It has to.
Because even my generation, there was like nobody in my family talked about a budget.
Yes.
So until I got to college,
that's right.
Sat down with pen and paper and started coming up with a budget because I knew like I'm working at Walmart. This was when I was transferred to UNA. So I'm working at Walmart while I'm in grad school.
Right.
And I'm like, I cannot live if I don't have a budget because I don't know where my money's going. My money's spending me. I'm not spending my money.
Oh, that's
and
good.
So I sat down pen and paper. Like even to this day.
Yeah.
Like when the first of the year, I make a budget for the whole year.
That's key.
The whole year.
That's key.
So pretty much nothing really catches me by surprise as far as when it comes to money. Okay. Now, my wife be looking at me. I was like, well, I ain't really trying to spend money on it because I already know for the whole year I got this certain amount of money allotted for miscellaneous and entertainment. And I'm already dipping into it. And I still got 5 more months to go. 6 months to go.
That's real.
So I'm like, I gotta calm down.
Yes,
in a couple months, I can pick back up. But I gotta slow it down. But I literally budget for and I will teach my sons that. How to budget, how to
so crucial,
how to earn money, and then how to invest money to make your money work for itself, not just to be a consumer all the time.
Oh man,
you know, it's hard right now at their young age for them not to be caught up in all the materialistic stuff because they see, they want, which I get that to a certain extent. Right. But it's like when we get to a certain point, like we need to be making money to make money. Like my oldest boy, he makes beads. He makes these little necklaces and stuff. But he gets lazy with it. Like you can literally make 10 beads, 10 necklaces a week.
Correct.
And make about $75 to $80 a week at 10 years old.
Love it.
So you can make, let's just say you could probably make about $300 a month.
Easily.
At 10 years old. Now you can keep 100 because you ain't got nothing to buy. You keep 100, we put 200. We can find something to do with the $200.
Coming for you,
right? Let's take this 200.
That's correct.
And find something invested in. So when you turn 16 and you want that car that I'm not gonna buy,
I couldn't.
You got an extra $15,000
sitting there. That's one thing I love about my dad, man. He told me that he used to take us in the backyard. We have to tune up cars in there.
Well, a spaghetti.
Did you bring some get some? We hungry too, yeah? No, just kidding. And he said, I can't buy you that car, son. He said, because you won't appreciate it. So I said, okay, Dad. He said, but come on here in this backyard. I'm going to show you how to tune up cars, do brake jobs, clean carburetors, wash cars. On the weekend, he worked at General Motors. He brought between 5 and 6 cars home a week. So in the backyard, we was out there doing that.
Sweet.
But I tell you what, in my car, if you got my car and you wanted to mess it up, I pull over and you get out.
There you go. You take pride in it. Come on.
It's the 65 Impala, but it's my baby.
Right.
And you ain't going to put your feet up where? You better get out of here, man. I ain't picking you up no more.
Man,
you don't have
look.
no appreciation.
I had an 87 Nissan Sentra.
Nice.
When I was in college. No, it wasn't nice.
It was transportation.
It was transportation. It wasn't like, it was 2-door, small.
Yeah.
And then, but a lot of kids in college didn't have a car.
That's correct.
So I would give kids rides back from the dorm room, from wherever we was going, from the gym, whatever. And so one day the kid want to crack jokes, but he ride in the car. He ride with me, cracking jokes, how small it is and all that. Yeah. My radio wouldn't operate correctly, all this kind of stuff. And I stopped the car, I said, bro, you can get out.
You sure can. And I'm okay with that.
You can get out, bro. Yeah. He's like, no, man, I'm just playing.
Oh, now you're just playing?
No. So it's like, I'm taking pride in my little whip, you know, because it makes you appreciate that next step even more.
Does, man.
Because it's like, bro, I remember, you know what I'm saying, not having not being able to clamp my seatbelt into the belt, the buckle.
Yes.
Had to stick a clothespin to make them connect. I remember riding around with a boombox in the back because I ain't had no stereo.
It sounded good though.
See what I'm saying? So when I started to acquire more, to upgrade, I appreciate it. Like when folks be like, you know, even my house, like, do I gotta take your shoes off? No, you ain't gotta take your shoes off when you come into, like, your feet just muddied in, but on an average day, no, just come on in, kick your feet up, relax, chill with me.
You just don't have holes in your sock.
So I'm like, hey, I'm down to earth, man. Like when it comes to stuff like that. Now, don't get me wrong. I want to protect my stuff. I want to keep it up. But when it's all said and done, man, I'm just in a season of my life where I'm just fortunate and blessed. And so why would I let somebody come into my home, invite them in, but then make them uncomfortable? You know, all these different rules and like, no, man, come kick it. Let's chill, you know. So
and I can appreciate that. I'm gonna throw something in about home ownership right quick too, man. A lot of times I met this old guy, he was like 75 years old. He said, Steve, let me tell you, on your home deductibles, go with the highest that you can. I said, man, they can be pretty high. He said, I went between $5,000 and $10,000. I said, you did? He said, yeah. It brought my insurance costs way low. Then I took that money and I put it in CDs. So I'd have a bank. So I say, I became almost self-insured. I kept my insurance costs down low. If I needed a roof or I had a leak in my house, I had cash money set aside to pay for it. We always want to get the $500 or $100 deductible, but that gives insurance companies to take your cost up. So when you take that money, raise your deductible, $3,000, $4,000, 1.5% or 2%, whatever you can afford, take the money in your savings. It's not meant to spend. It's need to put into an investment, something that's going to pay money back to you, or take it and put in your IUL policy.
That's smart.
Because what's happening is you're becoming self-insured.
That's good. I ain't know. That's one I ain't heard. I'll be researching all kind of ways.
Yeah, it's got to be a way. There's a way when we do our due diligence that we find information that we would never find because we're earnestly seeking after it. And when we're earnestly seeking and we get information, then I think that's when things open up for us.
That's good stuff right there. Let's go ahead into this next question. And we kind of hit on this too. So it'll be real quick.
Right.
It says, for someone who's never seen insurance as an investment, what's one mindset shift they need to make today? Well, you've never seen one before in your life. You've got to actually do the research again. Research the term, research the whole life, and research the IUL. And then you want to see what you're wanting to make. Because insurance policies have dividends. It doesn't happen on the term, but in the whole life and the IUL, it does. See, there's money they're willing to pay you for using your money because the insurance company just take our money and use it. Yeah, they invest.
And they invest because that's what they're there for. But what makes the difference for you is you're seeing a benefit of you getting back money in a policy that you before have never done before. So then that's the money there that should motivate you to want to invest. So it's not about I don't have the money. It's just I have to take the money and invest it to get money back out of it to invest more.
That's good stuff. We hit the last question already, the difference between whole life and term policy. You pretty much nailed that one when we first started.
Okay.
So we pretty much almost to the end of the interview. Awesome. And man, this has been very informative for myself. And I've already was kind of had a certain amount of knowledge when it comes to insurance. Where can they find you at? If they needed to reach out to you, what's either a website, social media, phone number, email? How can they reach you?
Basically, the best way is I have my office over in Athens, Alabama. It is Stephen.Tanner@countryfinancial.com. Stephen.Tanner@countryfinancial.com. And I have two insurance companies. Another one is named Omni Benefits with an S Group at Outlook.com. Omni Benefits Group at Outlook.com. These are two different agencies. We deal with different products on both sides. But just give me a call. I would like just to sit down with people. I think initially we're going to come to the Rescue Me Center, and we're going to teach on this. We're going to show you, if enough people participate, how to look at insurance. And then once you have an informed look, then invest. With your houses, your home, your car, all of it, you have to have it, but you have to know how to use it. A lot of times people just taking the home insurance policy again, and the home insurance tells you that you have to have a percentage of personal property. And sometimes that will be a little bit higher than what you have. So what you have to do is make an informed decision. I recommend this. Go through your house and videotape everything you have, just in case your ever loss came. Then that's documentation stating that you have it. But then while you're doing that, you're putting a real value on what you own. And if that value doesn't equal to what they say what they say they're charging you for, then you pick up the phone and you call them and tell them, I want to lower my personal value because I'm paying for something that I don't need. Again, with the deductible, you may want to raise that up. See, it's how you make the policy work for you that benefits you. It's just that I'm just going to sign up for something and I believe everything in the policy is all good. That's not true, because they're there to make money. So you have to do your diligence to say, this is what I have, this is what I need, and this is what I want you to do for me, because after all, you write the check.
What's the phone number for them to contact you?
256-710-2199. 256-710-2199.
This has been Mr. Stephen Tanner, the owner of Agent Country Financial. Mr. Stephen Tanner. I don't know why your first name. I guess I'll never really call you by your first name. Mr. T or Mr. Tanner. I never. So I was like, why is his first name so hard to pronounce? But you definitely need to give him a call. Reach out to him.
Yes.
He has pretty much given us the game today when it comes to insurance. The ins, the outs, the myths, the facts. And you can tell he's very knowledgeable about what he's selling, the service that he's offering, very knowledgeable. And he's the type of guy that he's not going to pressure you to get something that you're not comfortable with. That's just not how he rolls. So if you come in, you sit down and you talk with him and it's just something that you just ain't vibing with, that you just don't like, or you just don't understand, or you just simply don't want to do it, then hey, you are free to walk away. No strings attached. All right. 100%. Anything else you want to add before we close out?
That's it right there. It's not about trying to sell you something. It's about putting you in a better position. And if you're in a better position, you're able to do life so much easier, minus the stress, minus any other that, because life continues to happen. Continue sowing into your life, continue believing for the big things, not always micromanage it, not always. Sometimes we go to paycheck, but you can come from paycheck to paycheck to live better. So our thing is information, information. Then you're not the last person to know. You could be the first.
That's good stuff. All right, we're closing out. We had Mr. Stephen Tanner with us tonight, the owner of Country Financial. We're out. That's the end of our episode. Thank you guys for tuning in tonight. Like, comment, share, reach out to Mr. Tanner, reach out, knowledge, information. We out. You guys be blessed.